Hello and welcome to BQ Prime. I am your host Vikas Shrivastava. Whenever we talk about oil and gas sector, it is really difficult to ignore Cairn Oil and Gas, the company since last 2 decades which has grown from strength to strength. Ever since its discovery in the Cairn Basin, in the Barmer Basin of Rajasthan, the company today almost contributes 25% of India's total crude production. The company has massive expansion plans, not just into conventional, but also into unconventional like tight oil and shale gas. To talk about this and more, we have with us Mr. Nick Walker, who's the CEO of Cairn Oil and Gas. Welcome to BQ Prime, Mr. Walker.
Very good to be here, and thank you.
Okay. Since the Ukraine war started, we have seen the most volatile part has been the crude oil. No, from touching the peak to almost now $74 a barrel now. What's been your journey like? Since the prices went up, the government also introduced the SAED. So there are talks like you have been paying almost 80% of your taxes as revenues as a tax. So what has been your journey, and how do you expect it to be now? Going ahead.
Yeah, no, we've seen a period of high oil and gas prices, and of course, driven by world events. And I actually see that we'll see strong pricing going forward because I think over many years the world hasn't invested enough into oil and gas, and I think we need to reflect whilst the energy transition is going on, and there is a need to move to newer forms of energy. We also need to transition to that in a responsible way, and oil and gas is an element of that transition. And so we still need to invest into new forms of energy, oil and gas supply, so that we can support the business and support industry and the world. And I think what we will see going forward, as you know, over my history in the industry, we will see cycles in pricing. But I do feel because of underinvestment in new supplies that we will see a period of strong pricing going forward.
Okay. But do you expect it to move beyond 74, 75 to almost 80, $85? What's the optimum level you see?
Well, what I feel is actually moderate pricing is usually the best outcome, and stable pricing is usually the best outcome for industry because it's tough to plan a business and it's tough to plan economies on changing oil and gas prices. But the reality is it's not what happens. And so we have to plan businesses both for low oil prices and how we react on higher pricing. And that's what we do as a business so that we can run our business through the cycles. Mm-hmm. What I will say, and you mentioned it earlier about taxation, I mean, most of our contracts, our PSC contracts, actually are structured so that when prices are high, the government take the highest take, and when prices are low, the take goes away and drops off. And so I think they're sort of structured in a fair way for the government to extract the relevant value and allow us to invest into.
But are you comfortable with the kind of taxation that is there? Because globally, what we have seen, the practice is roughly maximum goes to almost 40%. But here, according to Cairns' calculation, I think you are paying 80%.
When you look globally, it's important that the tax system is structured to attract investment into assets. And I think India's done some good things with the new exploration license rounds to improve the opportunity for companies to invest and to take appropriate return. I think the legacy assets, the PSCs, actually, as we become more mature, the investments get harder to make and cost more. And so actually the terms need to improve. And if you look around to encourage investment, and if you look around the world, that's exactly what many other places have done, is improve the opportunity to extract the reserves which are harder to get, more expensive to get. And it's about creating that environment to encourage industry to invest long term.
Right. Has there been any kind of impact on your capital expenditure part? And if you're looking to revive it now because the dollar prices have fallen now? Sorry, crude prices?
Well, we don't run our business based on, the oil price has gone down a little bit today or it goes up a little bit tomorrow. I think the way to run a business is to look and manage it on a range of oil prices. So that's how we look at this. We want to make sure that we can continue to invest when the price is low. And so that's how we structure our business. So we think about investments so that they do make money at lower prices, because history tells us we will see cycles. But I'm excited by the growth opportunities in our portfolio. We've got a lot of things to invest into, and we're working at pace to try and bring some of these forward to grow production in the country.
Can you elaborate a little bit more on your these new production activities that you'll be undertaking?
Yeah, so we have some great assets, and we're blessed by them, particularly in Rajasthan, but in the offshore areas as well. And we have some really exciting exploration opportunities. But if we focus on our business today, we have around 250 million barrels of reserves. But when we look at the upside and the discovered opportunities, we have 4 times that. And my goal is to bring that into production as quickly as possible, invest in those opportunities. A lot of those sit in Rajasthan, but we also see opportunities in our offshore assets and also in our exploration. And when we start to look to the exploration side of things, we have upside, which is 6 times what we have already booked. So we have an aggressive and exciting exploration program to go and look at some of those opportunities through this year and the next few years.
Okay. Under OALP, recently you won almost 51 blocks. Total blocks are close to 61 blocks, if I'm not mistaken. So all put together, what would be the total 2P, 3P reserves that Cairn would have?
So today we have around 250 million barrels of booked 2P reserves on a gross basis. And when we look at the discovered resource, that would take it up to around 1 billion barrels. Okay. And then when we look at the exploration potential on a risk basis, including unconventional, we can take it to around 1.5 billion barrels. Okay. So that's as I say, 6 times what we've got at the moment. So our task is to go, and we can't do it all at once, but to move those opportunities forward, so and grow production and create value. And our target is really to grow production. Today we're around a quarter of India's oil production, and our target is to get to around 50%. And I think we have the asset base to do that, and that's what we're focused on doing.
So this 50% of India's total production, you're looking by when? What is the timeline that you're looking at?
It depends on how we move things forward, and I think we're looking at doing it as quickly as possible. That's my focus, and we have to see how the success of some of these projects move forward. And I don't want to promise a time frame, but we clearly want to do it as quickly as possible. And if we can do it in the next 3, 4, 5 years, then that would be fantastic.
Okay, so that's the kind of timeline you have set or target you have set for yourself?
As I said, I haven't set a target, but our aim is to do it as quickly as possible. And it's a bit early for me to say the pace at which we can do that. So we're working hard to accelerate our activity.
So 2 questions. One on the part of Capex. Basically, the Capex that you have would mostly go into what? Say if you can give a timeline for next 2 years, 3 years.
Yeah, I mean, we last year we'll have spent around $500 million, and I think when we look at this year, we have plans probably around $500 million, but it could be higher depending on whether we can move some things forward. And I would see, looking at this next financial year, about 2/3 of that money going into projects, to development type projects, which will deliver production immediately. And then around 1/3 of that money to go into exploration and growth projects, which would deliver volumes in the longer term.
So a lot of your projects where you are looking at enhanced oil recovery, many of these you'll require very big or innovative kind of technologies also, from moving ahead from surfactants that you all are doing now or polymer. So what kind of technologies you are working on if you are looking to tie up with some other players? And do you think that this will require more time also? Because if you want to do it in next 4 years, 5 years, this may take, or this may delay your overall production capacity building plans.
It's a really good question. And, when we look at Rajasthan, we've got 6 billion barrels of discovered resource there, and we've produced to date around 12% of that. And so there's a lot of oil in place in some tougher reservoirs, which are harder to get. And we've done quite a lot of work already with polymer floods, and we've done experimentation with an ASP flood, which is to include a surfactant in there, which has been very successful. We now need to operationalize and develop that ASP flood. But I think there's a lot of other opportunities. We have oil in some tighter rock. We have some more viscous oil in some very good rock. And we're working to bring North American technology here that's been deployed very successfully elsewhere to deploy that here. And, we're trying to do that at pace. And I don't really want to talk about the pace because I'm at the stage of trying to accelerate activity. And I think if we can do that, I think we can have quite a quick impact. But it's going to take a number of months to start to ramp that up.
Well, we have seen many of these US assets not doing well, So do you think, was that a cause of technology, or was that more of a financial or recession kind of things that built up during the period?
I think you can look at North America, and there's been lots of successes as well. And I've spent time working all over the world and seeing different technology, and I've been blessed with the opportunity to do that. And I see here some really fantastic opportunities to utilize the capability, particularly from some of our business partners, to help bring some of that technology here to really create value for India. And we have the opportunity to learn from what others have done to exploit it here. And it's a great opportunity. And as I say, that's what we're going to do at pace.
Out of tight oil and shale gas, which would be more feasible and more viable option? Because I think in tight oil, after a point, you are facing technological issues. But shale is something which is new, and you might come across more potential reserves. And
well, I'm excited by all, actually. I think tight oil, we got a lot of oil actually in rock that's tighter, and I think we're going to be progressing with some technology to see whether we can improve recovery out of that. We have some pilots going on at the moment, but I think we're going to try some other things, and so that's a real opportunity today, actually. Whereas developing the shale, we have to test whether the rocks will work for us, and then operationalize it, which is a longer term opportunity for us. So I think both are exciting, but I think we can move the tighter oil forward a lot quicker.
If you can give some more dopes on shale business, what is the current status and how far you plan to take it, say, next 2 years, 1 year's time? Yeah,
we're at the front end of this. I think you need to look at this a little bit like drilling exploration. I mean, we see that this is about extracting oil out of the source rocks, and first we need to go and test those to see that they have the right capabilities. And we've just drilled the first vertical well through some formations, which looks very positive. And the next step is to plan and implement a further, more like exploration phase of this. So, and then we'll be able to determine out of that study work whether there is the possibility to take it forward and operationalize this in a more commercial basis. And we're in the front end of planning that process.
How many more such wells you are planning to drill?
Well, we had done one well, and the plan is possibly another 2 wells, and we need just to think about how and when to do that program.
When you talk out your Capex plans, how much you are planning to devote only for shale or tight oil?
Yeah, we haven't. We're not ready to say exactly how we split the capital. As I say, around, we think around $500 million of capital next year. It could be larger if we can move some projects forward, and we have a number of other things that could make that bigger. But around $500 million, and around 2/3 of that would go into the development capital. And the tight oil things I would classify as development capital today. And so, and then we have around a third of the amount of that capital to go into exploration, and that includes the shale program. So
shale is a part of the exploration part.
In the way I classify things.
Okay. See, as far as green transition, people are talking about because of climate change, global warming, other issues, people are moving away from fossil fuel. Although we have requirement, a growing country like India will have no fossil fuel requirement for many more decades to come. But you as a company, do you plan or do you have some kind of strategy where you would like to diversify from fossil fuel to something else? What's your strategy going forward? Are you looking at something like that?
I mean, as Cairn, we're an oil and gas producer. That's what
Right.
we know. That's what we're good at. And I think when people look at us, that's what we're known for. And I think if you look at the energy mix going forward, I mean, it's absolutely right. The world needs to invest into new forms of energy and decarbonize, and we support that. And we'll talk about in a moment what we're doing around that. But oil's going to be here and required for decades. And
Right.
I think to get a transition to new forms of energy, we also have to support with continued oil and gas production on an affordable basis. And I think that's our strategic role within the Vedanta Group to deliver that. Elsewhere in the Vedanta Group, they are looking and have businesses to look at energy transition, new forms of energy. I think, but we also have to do that in a responsible way. So we are driving down our carbon emissions, and we've got an aggressive plan to reduce emissions from our business with the aim to become zero carbon by 2050 and reduce our emissions by 25% by 2030. And I would actually hope to do that carbon reduction quicker. I think it's the right
This
thing
you're
to
talking
do.
as part of the Vedanta
No,
group or
part
for
of
Cairn?
well,
For Cairn.
part of Vedanta's targets are the same as
Right.
Cairn's targets, and we're doing some really good things actually. For example, where you've just been in Rajasthan, we generate quite a lot of our own power, and we use gas for that, and we also buy power out of the grid, which has largely come from coal-fired power. And we've recently committed to invest directly and to buy power from a solar power project to replace some of that energy that we purchase. And actually, it's great business because not only are we reducing the carbon footprint of our business, but actually that solar power is coming at a cheaper price than the power we're buying out of the grid. So, and we're doing lots of other things. We're putting solar power on a lot of our projects locally. We're also investing. Committed to plant 2 million trees, which will reduce some of the emissions that we generate, and so and we're doing many other things. So I think we've got a great program to decarbonize our business, and I see that as part of our strategy and core to our business.
Okay. As far as renewable is concerned, I think you have tied up some 25 megawatt. What will be the more capacity addition as far as renewable is concerned?
It's hard
And
to
just
say at
to
this station, so we are looking at more things. It's fair to say we use around 100 megawatts of power in Rajasthan,
Okay.
and so how can we make all of that renewable? I visited our Cambay field in Surat yesterday, and again, we're generating our own power. We could sell that gas and we've got a project potentially there to look at solar power, and it's similar down in our other offshore field at Rava, and we have a program to look and see whether we can replace our own generated electricity that we create from gas with renewable power, and I think it's good business, and we're looking to do more of that.
Can you talk a little bit more on your RGT Gas project, and also as far as monetization of gas is concerned at your plant?
Yeah, no, it's a good thing to talk about. Actually, I think we've been very successful. When this was conceived of, it was seen as a source of energy to power our facilities there. But we've been able to take this very complex and difficult reservoir and learn how to maximize recovery out of it. And so we're generating quite a bit of gas today, which we're selling into the grid and into the market, and so it's a good part of evolution of our project in Rajasthan, and so we'll be looking to do more of that, and as I say, we're looking to reduce the amount of gas that we're using for our own fuel and create more into the market. So we're continuing to explore and look to maximize the recovery of gas.
How much total gas you are producing right now?
It's around 125 million cubic feet a day of gas, and
in terms of MMSCMD, it would be how much?
That's what's about 30, I guess.
30 MMS per day. MMSCMD. Yes. Okay. One last question on your overall outlook for the industry. How do you perceive it to be going ahead? crude prices, you already said you expect it to be higher going ahead. And overall, how the profitability of the industry would be affected. Do you expect government to reduce SAED or to completely remove SAED going ahead?
Look, India imports around 85% of its oil today, and 50% of its gas. And I think if it produced more gas locally, I think there would be a market for it, given the growing energy demand here. So there's a massive market, and as a company, we have a responsibility, I think, to see maximize our contribution to that produced in India. We're fortunate to work in an environment where government encourage that to happen, and so that's what our aim is going forward, to grow the business and build the business looking forward. And that's our strategy, and that's what we aim to do.
Thank you very much, Nick.
Thank you.
Thanks for talking to us.
Pleasure. Thank you.